Hello everyone, and welcome to AK Next Gen Vibes. You transfer money using your mobile or internet banking, and within seconds, the beneficiary may receive a confirmation. But here is an important question. When does the money actually move between the two banks? To understand this, we need to learn about two closely connected but different processes, clearing and settlement. In this video, we will understand what clearing means, what settlement means, how they differ, and how these processes work in systems such as NEFT, RTGS, UPI, and international SWIFT payments. How banks exchange money. Let us begin with a basic payment ecosystem. A customer initiates a payment through the sending bank. The sending bank submits the payment instruction to the relevant payment system. The payment system processes the instruction and communicates with a receiving bank. Finally, the receiving bank credits the beneficiary according to the applicable payment system rules. Within this journey, two important processes take place, clearing and settlement. Clearing prepares and determines the payment obligations. Settlement completes those obligations through the transfer of funds between the participating institutions. These processes may happen separately or very close together, depending on the payment system. What is clearing? Clearing is the process through which payment instructions are exchanged, validated, and processed between participating financial institutions before final settlement. The process normally begins when a payment instruction enters the payment system. The system checks whether the message follows the required format and contains the necessary information. It may also perform authentication, duplicate detection, participant identification, and other rule-based validations. Depending on the design of the payment system may determine obligations on either a gross basis or a net basis. In gross processing, transactions are considered individually. In net processing, multiple transactions may be combined to calculate how much each participant ultimately owes or is owed. The most important point is this. Clearing determines and prepares the payment obligations. It is not by itself the final transfer of settlement funds. What is settlement? Settlement is the final transfer of funds between participating financial institutions to discharge their payment obligations. For example, when Bank A must pay Bank B, the relevant settlement account of Bank A is debited and the settlement account of Bank B is credited. These may be accounts maintained with a central bank or accounts used under another approved settlement arrangement. Once settlement is completed, the financial obligation between the participating institutions is discharged. Settlement finality means that the transfer becomes final according to the applicable law and the rules of the payment system. This is why settlement is considered the stage at which the interbank payment obligation is actually completed. Clearing versus settlement. Let us now compare the two processes. Clearing involves the exchange and processing of payment instructions. Settlement involves the actual transfer of settlement funds between the participating financial institutions. Clearing validates transactions and may calculate gross or net obligations. Settlement discharges those obligations by debiting and crediting the relevant settlement accounts. Clearing generally precedes settlement, although the two may occur almost continuously in certain real-time systems. Settlement completes the interbank payment obligation. Therefore, always remember, clearing and settlement are related, but they are not the same thing. Clearing determines what must be paid. Settlement completes the payment between the institutions. Domestic payment example, NEFT. Now let us understand the concept using NEFT. NEFT stands for National Electronic Funds Transfer. It is a nationwide centralized payment system owned and operated by the Reserve Bank of India. A customer submits a payment instruction through Bank A. Bank A validates the customer request and sends a transaction to the NEFT system. NEFT processes transactions in batches and forwards the relevant instructions to the beneficiary banks. The interbank obligations are settled through the settlement mechanism operated by the Reserve Bank of India. After receiving the payment instruction, Bank B credits the beneficiary's account, subject to successful processing. NEFT is available around the clock and processes transactions through frequent batches rather than settling every customer transaction individually in real time. RTGS example. RTGS stands for Real-Time Gross Settlement. The term real-time means that settlement takes place as the transaction is processed, without waiting for a later batch. The term gross settlement means that each transaction is settled individually, rather than being combined with other transactions for netting. The customer initiates the payment through Bank A. Bank it performs the required validations and submits the payment to the RTGS system. The transaction is then settled individually through the bank settlement accounts. Bank B receives the payment information and credits the beneficiary according to the applicable process. Because each payment is handled separately and settled in real time, RTGS provides immediate and final interbank settlement. In India, RTGS is available on a 24/7/365 basis. UPI example. UPI stands for Unified Payments Interface. A customer initiates a payment through a UPI-enabled application. The application communicates with the relevant payment service provider and the NPCI UPI infrastructure. The transaction request is routed between the payer's bank and the beneficiary's bank. The banks authenticate and process the transaction, allowing the beneficiary to receive an almost immediate payment experience. UPI is an instant payment system developed by NPCI and built over the IMPS infrastructure. However, the customer-facing payment confirmation and the settlement of obligations between participating institutions are distinct concepts. Interbank obligations are settled in accordance with NPCI's applicable settlement rules and cycles. Therefore, the customer may experience an instant transfer even though the participating institutions still complete their settlement and reconciliation processes behind the scenes. International payment example. Now let us consider an international payment. The customer initiates a cross-border payment through the sending bank. The sending bank validates the request and sends a payment message, such as an MT-103, through the SWIFT network where that message type and processing arrangement apply. The payment may pass through one or more correspondent banks when the sending bank and receiving bank do not have a direct settlement relationship. Settlement may occur through Nostro and Vostro accounts maintained between correspondent institutions. The receiving bank then processes the incoming payment and credits the beneficiary after completing the necessary validations and compliance checks. The critical point is, SWIFT carries financial messages and payment instructions. SWIFT itself does not hold or transfer the underlying customer funds. The actual movement of funds occurs through the banking and settlement relationships supporting the payment. Where clearing happens, clearing does not work in exactly the same way in every payment system. In RTGS, payment instructions are validated and then settled individually in real time. In NEFT, transactions are processed through batches under the rules of the NEFT system. In UPI, NPCI's infrastructure routes payment requests between participating applications and banks, while the banks perform the required authentication and account-level processing. In card payments, the card network facilitates the exchange of transaction information between the acquiring and issuing sides and supports the calculation of settlement obligations. In cross-border payments, SWIFT provides secure financial messaging, while banks and intermediaries perform validation, compliance processing, and payment execution. Therefore, clearing should not be understood as one single universal step. Every payment system defines its own participants, validations, processing sequence, obligation calculation, and exception handling rules. Where settlement happens, settlement occurs through accounts and arrangements defined by the relevant payment system. For many domestic payment systems, participating banks maintain settlement accounts with the central bank. When settlement takes place, one participant's settlement account is debited and another participant's account is credited. In correspondent banking, settlement may occur through commercial bank accounts known as Nostro and Vostro accounts. A Nostro account means our account with another bank. From the correspondent bank's perspective, the same account may be described as a Vostro account, meaning your account with us. The settlement arrangement depends on the payment system, currency, participants, and correspondent relationships involved. The key principle remains the same. Settlement is completed through designated settlement accounts or other formally defined settlement arrangements, not merely through the exchange of a payment message. Why both are required? Why do payment systems need both clearing and settlement? Clearing helps ensure that payment instructions are properly structured, processed, and assigned to the correct participants. It can identify invalid instructions, duplicate messages, incorrect participant details, and other exceptions. It also determines what each financial institution must pay or receive. Without effective clearing, payment systems would face errors, disputes, duplication, and operational risk. Settlement is equally essential. Even after instructions have been validated and obligations calculated, the payment between banks remains incomplete until those obligations are settled. Without settlement, the receiving institution does not obtain the corresponding interbank funds. Together, clearing and settlement support accurate, controlled, and complete payments. Clearing determines the obligations. Settlement discharges them. Common misconceptions. Let us correct 3 common misconceptions. The first misconception is, SWIFT moves money. This is incorrect. SWIFT provides a secure network for exchanging standardized financial messages. The underlying funds move through banking accounts and settlement arrangements. The second misconception is, clearing means that the money has already moved. This is also incorrect. Clearing processes the instructions and determines the obligations. Settlement completes the transfer of funds between the institutions. The third misconception is, settlement is always instant. This is not correct. Some systems, such as RTGS, provide real-time gross settlement. Other systems may use batches, net settlement cycles, or correspondent banking arrangements. The timing and method of settlement depend on the rules and design of the payment system. Interview questions. Let us quickly review some common interview questions. What is clearing? Clearing is the exchange and processing of payment instructions, including validation and the determination of obligations before settlement. What is settlement? Settlement is the final transfer of funds between participating institutions to discharge their payment obligations. What is the difference between RTGS and NEFT? RTGS settles transactions individually and in real time on a gross basis. NEFT processes payment instructions through frequent batches under the NEFT system. Does SWIFT move money? No. SWIFT carries financial messages. The funds move through banking and settlement accounts. Where does settlement happen? Settlement may occur through central bank settlement accounts, correspondent banking accounts, or another arrangement defined by the relevant payment system. What is final settlement? Final settlement is the point at which the transfer of funds becomes final according to the applicable legal framework and payment system rules. Let us summarize today's learning. We understood the meaning of clearing and settlement. We learned that clearing processes payment instructions and determines payment obligations. Settlement transfers funds between participating institutions and discharges those obligations. We also examined how these concepts apply to RTGS, NEFT, UPI, and international SWIFT payments. We discussed central bank settlement accounts, correspondent banking relationships, and the complete payment lifecycle. The most important takeaway is, clearing determines what the participants owe. Settlement completes the financial obligation. Thank you for watching. Please like this video, share it with banking professionals, and subscribe to AK Next Gen Vibes for more banking and Oracle FLEXCUBE learning content. Keep learning, keep growing.